Wow, guys, what a week in the markets. This was one of the most insane weeks I have witnessed. We witnessed the shortest number of days with a 10% correction from a peak. The shortest number of days with that percentage fall ever in the history of the markets. I think that's pretty incredible. We obviously have a black swan type event on our hands here. And this is where the news cycle can start to change, guys. News will really drive the market at this point, and we have to pay attention to how the market is processing the news. And don't get too caught up in what the news says, but focus more on how the market is responding to the news that is given. Right, that can give us a good idea of what the market sentiment is like and what we should expect from the behavior of the market in the coming days, weeks, months. Do I think this is over? Absolutely not. I don't think this is over. I think we're just getting started. Whether it lasts a couple weeks, a few months, this magnitude of drop, not that it can't just have a V recovery, but it's very, very unlikely with the technical breaks that we've seen on many of the indices. And hopefully, if you watched last week's video, you should have been ready. Maybe you didn't expect this big of a drop. I didn't expect necessarily this big of a drop in this short of a period of time. But it's just seems like yesterday, last week, we were talking about the DJT, and I said that this had broken down at the end of last month. And that's worrying, right? We had broken down on a monthly chart from this green monthly trend line, and the day and week trend lines had not broken yet. So here's the daily and weekly. And I said, that's bad, right? That's bad. We have a potential head and shoulders here. I said if we did not get above this red zone, we could be in trouble. And that's what happened. So we can see here these trend lines did provide support for all but a couple hours on Monday, and down she goes. And we've put in what you could call a bottom. Do I think that this is going to be an actual bottom? Do I think it's going to stay at the bottom for a couple days? Possibly. We've come a long way, and we are at big levels, and I think this does have potential to be a bottom. The thing is, with the breakdowns that we're seeing, you see on the DJT, you see the breakdown on the SPY here. You see the breakdown on the IWM. The IWM is in a little different place. We have actually held these lows. Similar to the SPY, we held the lows. The DJT did not. The DJT fell very far, looking very weak. But the IWM is still above these lows, so that's one to watch early next week. You have SMH with a trendline break. However, we came up pretty nice off the 200, and you'll see the Qs did the same thing. So tech is relatively strong right now compared to the rest of the market, so that's interesting. Is that just because people want to own these stocks more, or are they trying to tell us something? I'm not sure, but it's definitely a divergence that is there. On the other hand, the XLF has a negative divergence to the market. The XLF fell 18-19% this week compared to a SPY of a few percentage points less. So you have financials leading to the downside. That's really, really, really not good for the market. Really not good. When you have financials leading to the downside on this type of volume, it's not good, guys. What have we done, right? It's the end of the month. Here's the monthly chart. We've double topped, right? We've rejected the former highs, and we've double topped. And we still are above the 50, sure, but that's a pretty high volume breakdown, right? In the recent days, and so it is too early to tell. But with these technical breakdowns, I think we can expect something like this, and I've actually marked it on SPY here. These two zones. So what these two zones are basically ranges that the market was in the last time it was in this area. You want to pay attention when the market has very defined ranges, and if price ever comes back into those ranges after breaking out, they can often act as the same important levels that the range was in. So I've just marked this box to represent this bigger range that the market was in here, and then I have a smaller one inside because there was a couple times here where the market made a range within this small box here, so you can see that. And so the market's going to play around in this zone is what I think. That's what I think. Now, if we get outside, or if we get above this zone and above these trend lines, it could be trying to heal itself. It could be telling a different story. But right now, I have to say that I would expect lower prices. I think we can get a bit of a rally, maybe a gap up. Maybe you gap above this zone and you get up here into the trend lines and you reject sometime early to midweek. And maybe they gap them down back to, if they do gap down back to these lows, it's very, very doubtful that they would be buying the market again. It's possible. I just don't think it's probable. Now, I do want to show you one other chart I have. Wrong one. This is not it. Sorry, it's on the ES. The ES, this ES chart, I don't think it's going to load. There we go. This ES chart, I have monthly zones drawn. I know it's a bit messy. I have a ton of levels on here. But where these zones converge, it's not really, excuse me, it's not really important how I got them right now, but where these zones converge, right here, right, this is the ultimate support, right at about 282. 2,812, right in there, 2,820. It's right here around these lows, and these lows are very important because we saw massive buying off these lows, defending a clearly bearish pattern. So this is really the ultimate support for me right now. I think if we break around this level, we're going to be headed to the bottom of the zone, which is another pretty massive drop, right? It's another 150 to 200 handles in the S&P, so it's a big drop if we break that area, and so that's a big area to be watching for the coming weeks. If we do happen to see just insanity in the market and we keep crashing, that's the area to be watching right here, these pivot lows. And obviously you have these two very important lows down here below. Those are really, guys, the main levels on the downside if we do come back down at all. So be watching those. Okay. Just to go over the sectors really quick, right? They all kind of look similar. Obviously, everything just took a hit, but you have the IWM showing a bit of relative strength, but not really any type of reversal candle. The IWM came up, filled its gap, and it rejected a bit. So be watching these lows on the IWM, because you can see, if I put my line there, right, it's a very big level. You've got about 1, 2, 3, 4. You've got areas here where it kind of goes above and below. Here's a hit. You can see here it struggles with it every time, right? These lows are very important. So you got to keep an eye on these lows. On the upside, you're really looking at the trend line and where these pivot highs are here. If the IWM happened to rally up to that area, that is definitely where you would find the first bit of strong selling, right? These are breakdown candles, and they go up and are hit with supply right at the top here into these trend lines. You've got the 200 period moving average up here. So that's the spot where you definitely find overhead resistance on the IWM. The XLF, again, they held the lows. They put in somewhat of a reversal candle. It's on high volume. So first stop is going to be the gap. If you can get over the gap, the close of this candle here, then you can go for the high of it, right? So then you're going for the high, you're going for the 200 period moving average, the trend line, this zone. So where is the strong selling going to come from on the XLF? It's from this area up here. And if it can't get above this gap, even more, if it cannot get to the gap, you see here when the XLF went up, could not get to the gap and trades and closes on the low, that's really, really bearish because the market should be filling gaps. If it's a neutral market, it should be going up and filling that gap, rejecting. But when you miss a gap and you trade down and you're closing on the lows on a wide body day, you're very far away from that gap now, and you're likely going lower right away, sooner than later. And obviously we can see that's what happened. We picked up on that. We had a lot of puts going into Friday because of how we saw the market react on that day. Again, the downside, you've got to defend these lows. You can see the strong buying that's come off these lows. You miss these lows, you're coming down to 25 at minimum, and there's another nice breakout area here around 24.50. That that's another 4%, 5% in the XLF. It's definitely going to get choppier, guys. It's not going to be as much of a straight shot. We may get some fast buying, but I don't think it's going to last super long. And it's probably going to turn into a lot of chop, right? They're going to try to chop traders up. They're going to try to get traders frustrated. I'm telling you, if you haven't traded volatile markets before, they're frustrating as hell. They're really, really difficult to read. I recommend you guys stay out of swings if possible, unless they're really not associated with the major markets. I'd advise to stay out of swing trades and really focus on just nailing those intraday runs that the stocks are going to have. Find the important levels, find when they're breaking, catch a run, get out, and just wait for the next day, because you can get crazy swings in these kinds of markets, and they're very hard to predict. Okay. Real quick, SMH, again, the most bullish looking. We closed above gap, we closed out the highs, we held the 200. How's the volume? Volume was less than these red days. It's notable. I think it's definitely notable. We do have a trend line that's broken. Don't place too much of your bias into trend lines because they cannot work sometimes. You always have to look at price first and just keep the trend line there. Keep it in the back of your head. If you see that it's still acting important, then you can act on it. But it was acting important. The SMH closed right on it, right above it, and then breaks, and boom, you get lower. So you can see the trend line is important. So we'll see if that comes into play or if it can heal itself and get back above that area. This area on the SMH right here, this candle, I'll bet you is going to be strong resistance around that trend line. If we get up there and reject, close below the trend line, it's going to be a big sign if tech does start rolling over, because it's the one sector that's looking decently strong right now. So yeah, that's going to be it. Hopefully this kind of gives you guys a little map for the rest of the week. And yeah, if you guys like this, please like it and subscribe. And I'll try to make a midweek video if possible. I've just been very busy doing other stuff, working, but if you guys want me to do a midweek video, I think if things stay crazy like this and it's kind of difficult to read, I'll try to put out a midweek video or two to help you guys out. So yeah, that's gonna be it, and I'll see you guys next week. Thanks for watching.